Okay, good morning, everybody. Thank you so much for attending. This is our last workshop for the week. I hope everybody learned something. Today, we're having a guest speaker, and he's our analyst in our group. Most of you know him as Wolfstock, and he'll be giving us some insight on his strategy and the way he approaches the trade. Okay, so we'll do that at the end. So let's get started. So the outline here is just going to be a workshop recap. We're just going to go over really quick about price action patterns, our technical patterns, our trend, again, on positions really quick, and risk versus reward. So just a quick recap of the patterns. Again, always enter at the break of a pattern. There is an exception to the rule when you are looking at a cup and handle. Typically, you want to enter at resistance and write it all the way to the top of the cup. Wait for it to be filled, and then ideally take profit above or at least towards the fill of the cup, and then wait for another re-entry. That's how I usually trade it. And again, some people refer to this as a fish hook or a cup and handle. And then over here, we have our technical patterns. We already went over this stuff. And again, like I've said, don't worry about the names. I always get confused with the head and shoulders. But my favorite patterns are the wedges, the rising wedges, the bullish rectangles. Those are great. And the triangles. And these are super, super important to remember. These are the price action patterns. And again, you would enter at the break of a pattern. It looks overwhelming, but as long as you can just memorize the formation of the patterns, you're fine. Don't concentrate on the names because it's just so overwhelming. So these are the bullish reversal patterns, and these are the bearish patterns. And then these are the patterns that are in continuation. So it just depends. You just have to pay attention to detail. We see these patterns every day. Every day we see these patterns, and we'll go over some of these patterns. I really like, these breaks when we have here. We create a little wedge, and then we see a continuation in our trend. So sometimes when we have tickers run really fast, how do you jump in? How do you jump in and do that? And I'll go over something quickly. For example, SPCE yesterday, although it ran really fast at the open, I found a good re-entry point midway once we consolidated for a while, and it took a while, when I saw that pattern form, and I'll go over it, and I'll show you guys how to jump in on a trade like that. Okay, trend recap. Always follow the trend. Trend can be the following. It can be a lot of things. A trend isn't just your moving average. It can be a price action pattern. It can be a technical pattern. It can be a breakout of support and resistance. It can be your price riding on your EMAs. So a trend can be all these things. And you just have to follow the trend. Follow the pattern. If there's a pattern that breaks out, make sure you pay attention to the pattern and always look at volume. Pay attention to your volume. Make sure that your candle has volume to coordinate with your pattern. And stick to your plan. Minimize risk. It's going to help you to avoid being faked out in a trade and also protect your capital. Okay, and I'll go over SPY. Good example yesterday when I alerted that as a day trade. So let's go to SPCE. Look how fast it ran yesterday at open. So if you look at the bigger picture, of course, you're going to see this huge candle, right? That closed. And if you had been trading the 4-hour candle, or I'm sorry, the 1-hour candle, you could have just been watching this. And don't get discouraged, guys. Okay, if you see something run, don't get discouraged. Don't feel that you cannot enter something like that, and don't take your eyes off of it. Always just look for a good re-entry point. All right, so I saw it run and I switched over to the 15-minute. And then I alerted this at the break of, you know what, let me double check here. Hold on one second. Oh yeah, re-entry above 49.20. So that would be here at the break of this candle. And this was before, obviously, this little triangle formed. Okay, so since we ran, and I was looking at it here, I got in yesterday at the break of around 48 because I had set my alert already. And I set it from, I think from the day before or the day prior. And my alert didn't hit and it hit yesterday. So as soon as it hit, I saw all this volume come in and I didn't even know about the news. Okay, that's another thing. I don't really trade the news. I didn't know that, you know, they have a flight coming up with Richard Branson. So, you know, it caught a lot of momentum, but nevertheless, I just followed the trend. So I saw all this volume come in and all these candles here. And I saw a good re-entry point around 49.20 here. And then what did we do for the rest of the morning after or during lunchtime? We just consolidated here and we created this triangle. And I was still in this trade here because, you know, the stock didn't really hit my stop loss. My stop loss was here at resistance at 47.68. So I set a little tight stop loss just in case, you know, we retrace, which we did. We went, we broke out of that price, but then we retraced back, but it never hit my stop loss. So I never got out of the trade. And I just rode it all the way to the end of the day. And that was my plan, which if you guys were following me on this trade and I was talking about it in the chat, I was telling you guys that I was going to take profit around 50 and then maybe re-enter and hold it till the end of the day and see how this pattern just took all day or pretty much half of the day to break. And yes, the rule of thumb is to exit on the height of your pattern. But if you have the momentum going, just follow the trend. You know, follow the trend. That's all you guys got to do. Just follow the trend and get out at any moment of weakness, which here I already had this resistance line drawn out and we failed to go above 52.30. So I took profit around here and I saw we had a huge rejection. Okay, not only that, if I zoom out at the 1 hour or to the 1 hour chart, you can see that we formed here a supply zone. And I drew that out and I saw it. I hadn't seen it until I looked at the chart a little more, you know, in detail. And so when we approach these supply zones act as a target, you know, if you're trading a certain stock, which I did. And yeah, you know, it kind of broke out after hours, but it didn't hold. You see how we just rejected to go over this pattern? Had we, you know, broke out of this supply zone, your trade would have still been valid, but really unlikely because we ran what, 42, we ran almost 10 points in a day. And that's really unusual for space to do. And I already knew that. That's why I had a light position when I re-entered this trade again. So it was way overextended for the day, and there was no way we were going to continue all the way to 60 like we did, a few weeks back. Now, I knew that it hit 60, but I wasn't going to rely on that at all. I was relying on this here on my supply zone, and of course, my resistance area here. And I just took my profit. So that's how you would enter something like this that runs really fast. So you would be on the 1 hour, just go to a smaller time frame, go to your 15-minute at least, and then find a good re-entry point to jump in on a trade. Okay. Don't get discouraged, guys, and think that you cannot enter these trades. You can always find a good re-entry point. Just go ahead and find a way to get in. All right. Let's see. Let's move forward. Oh, and I wanted to go over SPY. SPY took a while yesterday to break out. And I was on the 15-minute yesterday because we had a little bit of low volume. So whenever we have this here, when we have low volume, I like to move to a smaller time frame. I really like the 15-minute because it's more clear than the 5-minute. Yeah, you could have seen, but look, there's just so much noise. To me, it's just a lot of noise. And yeah, I could have, traded this at the 5-minute and added, but I don't like all this here. I like full candles. I like a clear trend. Okay, so I was here, I was watching all this, and what happened at the open? All these people got faked out. We created this price range. Let me extend that. And sometimes I don't have to draw out my patterns because I can already see it. And so I already saw this formation here, this consolidation. We weren't going to break, below this this price here. So I found that SPY had found support, and it was just bouncing off of the support level at 427.49. And so I just stayed patient. I was just waiting for that breakout. And I believe I alerted this at, let's see. Calls over 429.30, which was at the break of this pattern here. And what I usually like to do, I like to wait a little bit for the price to hold and break, because we had it break here, but it never went over. And so, yes, my alert went off, but I didn't enter the trade because we didn't hold. And we attempted, before it broke out, 1, 2, 3 times to break out of the pattern, and it didn't. Although we had the price action that was confirming it here, this was a fake out, and it could have faked you out had you just jumped right in because your price broke. No, that's not how it works. Wait until we have confirmation, wait until we break out of this price. And even if you got in at 429.60, still a really good entry, and only 30 cents away from your trigger. It's not that bad. Okay, so don't think that you're missing out on the trade. You have to get in at the break of your alert. No, always wait for it to break. Always wait for confirmation, and always wait for your next candle to open above the close. And that's what I did here. So I was looking at it here again, and I saw that this next candle around 8:15 was opening above this candle. And then I saw this crossover that we had on the EMAs, and I just took the trade. All right, regardless of my STO that was here at the top, this is just telling me that we're breaking out of consolidation. And we did break out of a TTM squeeze. It wasn't that big of a move, but you know what? You could have made a really nice profit, and you could have gotten out here at 431.70. Now let's look at a bigger picture. here. So your EMAs act as support and resistance. And do you see the difference of trend once we move to a bigger time frame? So what I did was I looked for I set my target here around 431, 431.90, I believe is what I said. And the price did just that. It just broke out and it rejected to go over our moving average here on our big time frame, and we just pulled back. So if we go to the 30-minute, we had the crossover at the 15-minute, but here my moving averages acted as my resistance, which was my 50, my 200 right here. So since I saw that we did not break over, and I said that I was going to take, or I was going to re-enter at the break of around 431.70, 431.90 to re-enter this trade, we never broke over this price. And so I moved over to puts and grabbed just a little put trade here, and I just covered here when we couldn't break under 429.60. So if you know how to utilize your moving averages, you can utilize them this way, and they act as support and resistance. I didn't even have to draw out my lines here because I rely a lot on my moving averages, and they tell me when to get out of a trade. They tell me when to take profit. And so I caught this here at the bottom, and I just rode it all the way to the top. And I wasn't about to bag hold that, hoping that we were going to break out to 434. No, it wasn't going to happen. Especially given the events that we had yesterday. It could have gone both ways, right? Could have broken out here, or we could have sold off dramatically. But we didn't do that. And then what happened after hours, we broke out of this consolidation here at the bottom, and now we're moving upward. All right, so does that make sense to everybody? All right, cool. Yeah, so a way to avoid getting faked out, you just follow your plan and you minimize your risk. You help, all this stuff helps you avoid being faked out in a trade, and it protects your capital. Okay, so let's see, is Wolf here? Let me check my phone, hold on, guys. In the meantime though, do you guys have any questions? Any questions on the topics that we've covered, or any questions, period, that you guys want to address, any areas of concern? Okay, ask away. Go ahead and go on voice. And let's talk about it. How do you look for swings at the end of the day? Good question. Hold on one second. I usually like to wait midday or towards the end of the day to get a swing. Sometimes on a rare occasion, I'll enter kind of close to the open, or I'll wait, a few hours, only because I already know I have, a certain ticker on my in my plan, and I'll know when and why to enter that. So let's go, for example, Logi. I've been talking about this stock for the longest time. So we found an entry point on Logi. I believe it was at a break of 125 for a swing. and I entered this midday. I think it must have been maybe like 10 a.m. or something like that, my time. And the reason I entered this trade, so I entered at the break of resistance with a July 16th expiration, only because they run on monthly expirations. And what I like about Logi was that it was a very good, it's a very resilient stock and it's really defensive. So since I knew that, I knew that, you know, the weekly chart was looking really bullish, and I knew that we were breaking out of consolidation. You know, I had it on my watch list, or I've had it on my watch list for quite some time. And, you know, it finally broke out. So sometimes it's best to get in towards the end of the day. You know, this way you can get filled at a really good price. But had you waited, you know, until the end of the day, your price was already up to like what, 127, as opposed to when we entered at 125. So again, it's always good to have a plan. Have a plan, you know, write it out, and write out your tickers of interest for your swing. And sometimes it doesn't really matter what time you enter your swing. You can enter it at any time. And if you see your price break, just execute it. Find a good position, position yourself. That's another thing. Position yourself for the trade, and just take your swing. And always buy time. I always like to buy time, but here on Logi, I didn't have a lot of options. I could have grabbed the August call, but it doesn't look like it's going to last that long. So it really doesn't matter what time you get in. It's up to you though. A lot of people like to wait till the end of the day. That's fine. But again, your trade can always run up, and then you'll buy too high. So let's say you had gotten in, you know, here at the top, at the end of the day, you know, you would have been at a little bit of a loss, because, you know, we pulled back the next day, and we're just consolidating today. So that's another thing that you also have to look out for, the price of your contract. And if you wait that long, I mean, yeah, you could have gotten here, let's say, you know, filled at the money for like what, you know, $1, let's assume, and then you wait till the end of the day, and then your contract's already up by $2, you know, 250, something like that. That's a little high, and then your IV gets a little high too. So just be aware of your trigger points and just execute it. Okay. You're welcome. Oh, okay. All right, Woofy, you ready?
Yeah, I'm ready. Could you guys hear me?
Oh, hold on one second. What about IV? IV for swings. Do you always take the IV pump? Yeah, sometimes. But you know, when I'm entering a swing, I make sure that my IV is a little decent. I make sure that, you know, it's at a good price. And if my IV is really too high, I'll just go in light, and then I'll add to my position depending on how my IV is. You know, if my IV is like at 200 or 100, I won't really enter that swing. I might just look at it as a day trade, and I'll go from there. But for the most part, I try to avoid swinging something with really high IV, unless I have, you know, a really bullish technical indication that, you know, we're going to go forward, we're going to just break out of that pattern. I might just do a short-term swing, like an overnight swing, or maybe hold it for a day or two at that point. But I would enter I would enter my trade in a more technical way. I would, enter at a pullback just to get filled at a low IV. Okay. Okay, so I'm gonna pass this on to our analyst, Wolf. So go ahead and join us. I'm gonna stop sharing my screen.
Could you guys hear me?
Okay, are you ready? So I can turn off my screen.
Oh yeah, I'm ready.
Okay.
It says host disabled participant the screen sharing.
Okay, go ahead. It's all yours.
Yeah, it's not letting me join. It says the host is not allowing screen sharing.
Okay, there you go.
Okay. All right, good morning, everybody. I just want to talk about a little bit how I find trades and what makes me get into trades personally. I used to go based off indicators like MACD, my EMAs, but for the past 2 weeks, I started learning about volume price action, which Trader Ace always mentioned. Um, so once I started learning about it, I noticed how important it was. Um, as you can see here, we have a little downtrend here. We have a long tail, be considered a hammer. We have higher volume than the previous days. So that's a good signal. You could wait an extra day for confirmation. And as the next day approaches, you see a wider spread candle. It has an upper wick. That means there is price rejection. So there's still sellers there. But as you can see, you're already on top of the EMAs. So that price is being held as support. So you could feel a little bit more confident about the trade. I would even take it here. If you're able to grab it down here, then you can set your stop loss right under where you entered. So it's a great risk to reward swing. But as the days go by, I personally check the candles along with the volume because as you can see, we have a widespread candle here, which means we still have buyers. And if we wait the next day, we still have another widespread candle with low volume, but that's no big deal. And then the second candle shows another higher wick. But if you take the trade here or even here, you could grab all of this in an overnight swing. Not only that, but on this day, your EMAs are crossing the 50 EMA. That gives you more confirmation of more up towards the trend. But me personally, I would enter the trade here and I would probably exit here or here. It's not good to get greedy. And at this point, you can still see that there's sellers up here. So the decision is really up to you. But as you can see, the candles tell you a lot. We have a smaller spread here, a more narrow candle, but look at the volume. The volume is way higher than all these. So that shows from the things that I've learned, that shows that the market makers are interested in that stock. So when they're interested in that stock, there's more volume, obviously, to push the price up. And Home Depot still ran all the way up. I personally feel like I got into Home Depot a little too late. I got into Home Depot around 320 because of a key level. So I wanted to confirm that key level, but I after reviewing after I got out, I think I got into the swing without analyzing it very well. I re-entered, but I got crushed yesterday with the dip. But as you can see also down here, your MACD is crossing and momentum is growing as you're going up. So you have one signal, two signals, you have the candles, three signals, the EMAs. You have a lot of signals telling you that we're going up. So that could make you enter the trade. Up here, we can see that we already have a lot of wicks. we have upper wicks, lower wicks, we have low volume. The price did go up, but it's showing weakness in my opinion. Um, I held here. I held here. I was thinking of selling here because we have a widespread candle. It's red. Um, it closed right under the 21 EMA, so it had me a little worried. I didn't exit the trade because we have lower volume. If it had higher volume than all these candles, I would have exited this day, but I didn't. So I waited for the next day. We had a widespread green candle, so I thought it was a good sign. We're still holding above the EMAs. So I thought here they're trying to, you could be faked out. You just don't know. You need to go based off your education, basically, your experience. But I waited here. We didn't have a lot of volume either. My MACD was almost crossing over, but there's certain situations where your MACD is about to cross over and it bounces back. So I wasn't really I wasn't you could say convinced that we're going down. I just thought we're gonna go a little bit up more. And then obviously yesterday we had a bad day. A lot of stocks just tanked down. And I exited my position here. We do have a long wick at the bottom, which means buyers push the price up, but the volume it just didn't convince me for the candle. I wasn't feeling it anymore, so I just got out. Who knows what will happen? But yeah, the candles could tell you a lot. I could show you guys another example. I played Baba about 2 weeks ago, and I got a little nice gain out of it. But same thing here. At this point, they're deciding about the price, where it's gonna go. We have narrow candles, as you can see, narrow candles are already giving you signals of buyers and sellers. If you have longer, lower wick candles, in my opinion, it means that the buyers are stepping in, they're pushing the price up. So you could wait all this. As you see again, price is holding above the EMAs. You have a little widespread candle, but look at the volume. The volume is way higher than all these days. So that gives you confirmation. The EMAs give you confirmation. Your MACD gives you confirmation. All this momentum gives you a confirmation of still holding throughout the days. So here you kind of get right here you kind of get a signal of basically exit the trade, because you have a upper wick. They're pushing the price down, and the volume is not as powerful as this one or this one where you possibly entered. Also on the put side, Baba, after that run, it had a widespread candle to the downside, and the volume is higher than the 2 previous days. So that gives you a sign that we're going down. Your EMAs are curling down, your MACD is curling down. Momentum was dying at this point, and now you have a lot of selling momentum. So all those signals can give you confirmation of where the price is heading. You could wait a couple days. If you didn't enter here for the put side, you could even enter here. As you can see, we still have a bearish candle with the little widespread, but the volume is also high. So I would enter puts here. I wasn't really paying attention. Like I said, I just started learning about this after my Baba trade and after my Home Depot trade. But it really tells you a lot to the story personally, because like I said, I used to go based off my indicators only, and obviously like candle patterns. But I feel like reading the candles and reading the wicks and with the volume, it gives you like an extra push, um, I want to show one more of DKNG. If I'm going too fast, you guys could tell me to slow down. So DKNG, I also use a fib retracement. Fib retracement you could grab from the lowest point and the highest point. I like to swing trade personally. I don't really have the time to be day trading. I also feel like it takes a lot more skill, a lot more a really good eye, basically, you could say. I would like to learn it one day, but right now I'm really focused on swing trading. But I use the fib retracement because fib retracement could tell you a lot. As you can see, I look at the 50 and the 61. Um, Let me zoom in a little bit more. So, so DKNG, so here, you're getting a little bit of a volume and a wide spread, so it could show strength towards the stock. I wouldn't get in here, because I usually, when I see a change is gonna happen, I'll wait for a couple more signals to get confirmation. So here we got lower volume. I still wouldn't enter. We still have lower volume compared to this previous day, so I still wouldn't enter. I would possibly enter here, even though the volume is lower. We have a stronger volume back here, and the price is holding above the EMA. And then the next day you have a couple wicks, but nothing to worry about. And if you held, if you held, you're holding for like 2 days, which is not bad. But you see volume picked up here. The volume basically matches the candle. You're above EMAs. We're about to cross the 50 EMA. We actually opened and closed over the 8 EMA. So, and then DKNG ran all this. You could have grabbed all this in a matter of 4 to 5 days. The reason why I use fib retracement is because it could also tell you a lot to the story. As you can see, we went here, we passed the 60, we passed the 50, we're holding over the 50. So that shows you a sign of support. We went a little bit, like I said, you could already exit the trade around here. But also, like, now that DKNG has been going down the past few days, at this point it came down and it touched this 60 retracement again. Yeah, it went a little lower, but I mean, that happens, you know. But I wouldn't enter a trade here just because of the MACD. It's showing selling power. And then, I mean, you could enter puts because we have a spread candle with high volume. But like I said, I usually wait for another day of confirmation. So as you wait, you kind of need like a couple more signals to confirm your trade. But this fib, it could tell you a lot. We hold over the 50 here. We ran back up. We came back down. Now we're testing it again. So it could just tell you a lot. I personally think that if you really want to learn the stuff, like, I understand it's frustrating and very overwhelming, but Trader Ace and Morano are very good people. And yeah, that's basically what I look for personally, for just basically the candles and the volume. The candles need to match my volume in order for me to enter the trade. My EMAs need to confirm, my MACD needs to confirm, and that's how you could catch a swing. Because like I said, I didn't learn about this until like 2 weeks ago. But Baba, I could have played both sides. Baba, I got it here, and it ran all the way up here. I sold here, and I sold here. For example, I sold here, and I didn't know about a lot about the candles and the volume. Me personally, I would have waited till this day. If I saw this widespread candle with this volume, I would have held throughout the next day. Throughout the next day, when we went up to 230. My contracts, I got them super cheap. I had two of them. I could have. They ended up going over $900 profit each contract. I left with I got out of the trade with 150 from each contract, with the total of 300, which that's fine. You don't always have to wait till the last minute. It's always better to take your profits and just, if you're happy with it, just wait to see where stock's going, because you could wait here, but then you already got a higher weight, this price rejection here. the volume's lower than the previous day. So I would sell here, but I didn't know about that during that trade. So, I mean, in this business, you learn as you go. Honestly, you learn as you go, and there's no shortcut. But if you don't learn yourself or experience the situation, it's hard. It's harder to learn. You know, you need to experience it, so you don't need to be hard on yourself about like, oh, like I missed it, I took profits too early. Like, no, as long as you're learning from it, then that's fine. But like I said, Baba right here also widespread, higher volume than the previous days. EMAs are curling down right here. We got a crossover. We're crossing the 50 here, so you could have caught this whole move right here. This whole move, you catch this whole call play, then you catch this whole put play in a matter of, what is it, like 10 days. But yeah, that's pretty much what I look for in every single trade that I get into. I was a really big fan when I first started training about indicators and all that. But my goal in the future is eventually to um, try to go just based off reading candles, maybe not even EMAs, maybe just one or two. But yeah, I'm trying to build my skill more as a VPA, because I feel like it has a, like I said, it tells you a lot. It tells you a lot about the stock, about where the, because the market makers, what they're trying to do sometimes, they're trying to shake you out. You know, it's they're trying to shake you out. They're trying to basically make you like get a shakeout. You know, you guys know what I mean. But so knowing these things, it's just an advantage. You know, you get another step forward. You got to know what's going on, because indicators could also, like, they could play you sometimes, you know, like right here we have this MACD. It's not really confirming, and then we ran up here, but what confirmed it was the volume. That's what confirmed the upside. So we had a widespread red candle with high volume. This MACD could have easily gone down, and and that's what I mean by, it tells you the candle and the volume confirm your can confirm your indicators. But yeah, guys, that's pretty much how I find trades, and that's how I plan on doing it for a while now. Um, I also started using a volume profile. I want to show why I stayed in HD, which these are situations that you can't really blame yourself for, or beat yourself up for it, because I think it was a shorter time frame. And I'll show this last thing before gotta get ready for work soon. But um, so I started using volume profile a couple of days ago also, because of I just read and watch a lot of videos about stuff. So I just really liked how it worked. And this volume, this is the volume control basically out of this whole volume. It's where there's the most shares traded in the stock. So as we were approaching the day prior, where Home Depot went down, and I wasn't convinced because of the volume, I held and I held, and then the next day we got an extra push. During pre-market, I was looking at this level, because this could be considered as support or resistance. So if we went down and we're trying to bounce back up, it might be hard to get above this level, especially because we already had a great run back here. But that's why I waited. We held above it. We're pushing like crazy that one day. So I was like, this is it. You know, we're running. My MACD's confirming momentum, and the momentum is growing. So I still felt confident about my trade. But as we open, as you can see, we had a very very good gap down. You know, and and these type of stocks, they move a couple dollars, you know, they move $3 to $5 a day. So they could do damage, but it's all part of the game. You know, you can't blame yourself for it. Just get out, refresh your brain, and jump back right in when you're ready, when you see. But yeah, that I think that's it. I hope you guys understood. There's a lot of information out there about volume volume price action. I know Trader Ace mentioned it a lot. You guys could ask her questions. If you guys haven't taken her course, or Moreno's course, I really suggest it just because based on my experience, I wanted to learn myself as well. I want to be self-taught. I just don't have the time for it. And not only that, it could be very, very frustrating, because then you're doing wrong things, and you're blaming yourself, and you might end up quitting, you know? So it's better to have some mentors to guide you, basically, to help you. They're giving you a hand. They're giving you a hand in this game to get an advantage. So I think it's very helpful, and yeah, like I said, that's everything I look for, and I hope you guys learned from it. If you guys have any questions, you guys could also ask me, or ask Trader Ace, or Moreno, or put it in the chat. But we're all here to help each other, and help each other learn, and that's the goal for us all, to become better traders. Yeah, I think that's it.
Awesome. Thank you so much for your presentation.
You're welcome. Thank you for having me, and letting me share my experience with others.
All right, awesome. Thanks. Okay, guys, that's a wrap for Woof. You guys have any more questions?
I heard I heard somebody mention about IV. I personally don't buy high IV contracts, because if you're wrong on the move, based on experience, if you're getting a contract over 100 IV, and you get a gap down, if you have cause, your contract's gonna get destroyed, because it basically sucks all the juice out of your contract. So I just saw somebody mention that. That's based on my experience. But I mean, if you're day trading it and you're sure about the move, there's no big deal. But as a swing trader, I try to go for lower IVs, because, like I said, if the move doesn't go your way, it doesn't do as much damage as getting a very high one. Yep, and that's it. I gotta go get ready for work.
All right, awesome. Thank you so much.
I just press stop sharing, right?
Yeah.
Cool.
All right, cool. Okay, guys, I hope you guys learned a lot. That's like a lot of information, really good presentation that we had with our analyst. He's really good at spotting trades and mostly swings. So if you guys are in our room and you don't have time to day trade during the day, totally fine. Don't feel like you're missing out. If you don't have time to, to trade during the day, just look for some swings. It's really easier to swing as opposed to, being in a day trade or even scalping at that. All right. So we will go ahead and do some market prep. I was looking at some tickers here. So this is my watch list for the day. I'm mostly going to be looking at the industrial sector and also the banks. So let's see what Bank of America is doing. And I like the banks because they have a lot of volatility, and Bank of America's contracts are really cheap. They're really affordable. And we can always see some good volatility on a Friday. So the banks, The banks are on an uptrend. And here's a little tidbit. If you guys can't afford to trade a certain stock, then look at its ETF that it falls into. So for example, the banks fall into XLF. Okay, if you guys can't afford, you know, a Goldman Sachs contract or a JPM contract, then you know what? Just trade the whole ETF as a whole. No big deal. Just trade it. Find a good position. For example, right here, if you guys want to trade XLF for the day, you could get it in at this break at 36.30. We will go ahead and fill the gap, or we fill the gap, and if we hold above this level, we'll see a nice push to maybe even 37. Not a big move, but if you can, you know, you can definitely catch a nice little day trade here. And if we hold above this, then, you know, obviously you would hang on to your contract and just get out at a moment of weakness. So I'll be looking at the banks today. Let's see, XLI, same thing with XLI. XLI holds the industrials. It holds stocks like FedEx. Their contracts are pricey. UPS, their contracts aren't that pricey. They're, you know, they're relatively affordable. CAT is really affordable. I really like to trade CAT because their contracts are really cheap and they have a lot of volatility. But again, if you guys can afford to buy at the money, let's say for FedEx, then just look at the ETF XLI. Contracts they're affordable, and look at this. We're sitting on top of our moving averages. We're sitting on top of our support. We broke out of all this choppiness that we had yesterday. And although we gapped down, we had a really nice rebound, which most stocks did yesterday. We sold off, or we pulled back is what it was. We pulled back. We pulled back, and then we pulled right back up. Okay, we didn't stay right here in the mud. We just, the buyer stepped in. For example, here on XLI, we saw that it wasn't breaking under our support at 101. And we just took it all the way back up to fill the gap. Now, this is another trend, gap fills, okay? Like I said yesterday, gaps fill 80% of the time. And again, if you can't afford FedEx, just go ahead and find a position here in XLI, and you can find like a nice day trade. We have an STO crossover, and we're releasing from a squeeze. So that means that we can see the XLI sector pop today, which also includes BA. BA is expensive. And look what it's at now. And Wolf alerted this yesterday at the end of the day, or I think midday. He was talking about how BA was going to break out yesterday, and it did. Look at that. And I think I alerted this at 2:36. I couldn't get filled, and I saw that, you know, we were just on a crazy spike. I was at the 15-minute. Look at this. We had a crazy end of day pump. Why? Because, you know, investors saw that XLI was holding support, and everybody loves BA. I don't. It's not my favorite stock to trade. But, you know, you can have a substantial gain with BA. So you can probably catch a little day trade here on BA. Our STO is a little overbought, but that just means that we're just going to consolidate here maybe. And if you guys want to find a day trade here above 239.40, totally can trade it. Okay, so let me put this on my list, on my industrials list. What did I say? 230, 239. Okay, and always remember that your price needs to hold. Okay, your price needs to hold to take that break. So let's see, I'm looking at HD. Let's just do a quick little recap on the trades I'm going to take today. HD, look at all this volume stepping in. And yes, we we sold off yesterday and we pulled back, but we bounced off our support. I'm still holding my swing. And the reason being is because we're bouncing off the EMAs. And so the only time that I would get out of my swing is if we cross over, if I see my EMAs cross over, and you will see a lot of noise in the small time frames. There's just a lot. Well, not that I'm saying the 4 hours is a lot of noise, but it's way much different than the daily chart. And yes, we gapped down, but our EMAs never crossed downward, and it didn't give me a sell signal. It didn't tell me to get out of the trade. Okay, and this is why the EMAs act as support and resistance. And look how the 200 moving average acted as support. What did we do? I mean, we didn't touch the 200 completely, but we did make an attempt to touch it, and then we just bounced right back, and we started to just consolidate here above the 50 moving average, and the price held above it, which told me to stay in my trade. And I did. And again, I stick to my big time frames. I'm not looking at the 5 minute when I'm swinging. I'm not looking at the 1 minute, because if I am, it's just going to fake me out, and it's just going to cloud my judgment. And that's not a good thing, guys. Okay, because that's a common mistake that we all make. We're all looking at every single tick when we get so obsessed with it that we just want it to move, you know. But that's not how it works. When you're swinging, look at your big time frames, stick to your big time frames. Okay, had I seen a dramatic pullback, you know, to like, you know, 306, then yeah, I would have gotten out. But we didn't. We're holding above the EMAs, and we can definitely see a continuation next week into earnings, which earnings are until August. So we have a lot of time. So we can see some momentum within the next few weeks. And this is why I emphasize to buy time. If I'm swinging something, why would I get a same week expiration? Unless I'm swinging it overnight, or you know, I'm swinging it on a Friday, you know, or midweek into next week, then yeah, I would do that. I would swing a weekly, you know, contract. Or if I'm going to swing something, you know, for a day or two, I'll get the same week contract. Only if I do that maybe on a Monday or a Tuesday. Because if I get the same week expiration and I wait until Friday, my contract's going to decay, and then I'm going to, you know, get a loss, and I'm not going to be too happy. So this is why it's always essential to buy time. Time is money, guys. And even if you spend a little more and you get an expiration for, you know, let's say the 23rd, and we break out on Tuesday, you know, let's assume we hit 340 on Tuesday. The fact that you paid a little extra for time pays off, you know, because if you had gotten, you know, the 716 contracts, and you don't see your stock moving on Monday, you're like, oh my gosh, you know, I'm gonna, you know, this is gonna sell off, it's not gonna hit. You get out of your trade, and then guess what? The next day it makes a really bullish move and it hits your target. And that's when we start getting FOMO, we re-enter, and then we get sloppy. So it's always good to buy time. And when I alerted this, I told the team to buy time, at least at minimum, a 2-week expiration at that. And I grabbed the 16, the 23, 23 expirations. And I might even add here to maybe grab one for 30, for 730 expiration. Okay, so always look at that stuff. Don't get discouraged when you see a little bit of red. All right, always stay on your big time frames. Okay, guys, so this is a little list. I'll give you guys some free game today. If you guys want to take a screenshot for the people that are not in the room, this is pretty much what I'm going to be looking at for the day. Tech looks like it's going to make a rebound, but we are in a consolidation period for in the NASDAQ. Let me zoom in here. Yeah, so we're in consolidation here with the NASDAQ. We need to break above this price here at 14,745 to go ahead and take any calls on tech. And if you guys can see, Apple is doing the same thing. It's just consolidating. So these tickers and these indexes, if it falls in its respective index, chances are it's doing the same thing. Chances are, you know, it's flowing the same way. Sometimes you'll have an exception to the rule because it got an upgrade or it has some crazy news. That's the exception. Other than that, they all run together. Okay. So any questions? Anyone has any questions, any tickers that, you know, you guys want to look at for the open? Speak now or forever hold your peace. Okay, guys. Oh, Walmart. If something gapped up, would it be wise to play? Oh, like STMP. Okay, let me look at Walmart really quick. Oh, Walmart, man. So frustrated with this stock. It moves so slow. Moves so slow. I mean, you can catch some day trades on Walmart. Like yesterday, you guys could have caught this little pump here, which we were talking about, you know, we were talking about it, and it went all the way up to 140. But see how, again, we were talking about this level, how it just is not breaking for this 140 area, and it didn't. But it is sitting above our EMAs, but it's still in this chop zone. Okay, and I drew this out a few days ago because we're just in a consolidation period. Let me just make this a little smaller. There we go. And the reason being is that we have all this chop here, and the way we can tell is that we have these big topping tails. We have all these topping tails here, and we're just consolidating. So I really don't like to trade here because it's really easy to be faked out. But if you guys want to catch a little day trade, we'll see if we can break over 140.65 to take a trade here. Maybe catch a little day trade. You can get away with that today. But always keep in mind volume, just like Wolf was saying. And you can tell that all these were fake outs, yes, or, you know, these past few days, because we don't have any volume. And look, we had this spike here, but no volume. So this was a manipulation trade, or this was like a fat finger, or just a market maker playing with everybody, just to take your stops here at the top. And that's exactly what happened. And then what happened, we dipped, and then we just sold off. So always keep in mind of your volume. Our IV is running a little high. So if you decide to day trade this, just, you know, go in a little light. Did you? Right here? Yeah, I mean, it's not a strong cup and handle because usually cup and handles, oh, right here. It's supposed to be rounded. And it is. This could be, you know, this could have, you know, this could be our handle. But once our cup is filled and our handle is formed, that means that this specific trend is over and we're emerging a new trend. Okay, so this cup and handle move is over, and only because we didn't continue to go higher, we just ended up consolidating. So this is our new trend. This is a new trend that we have now, and we're just looking for this to break. We just need some sort of catalyst or some volume to step in. And if you can tell here, like we have 3 days of a lot of selling pressure. So really what people have been doing, they've been seeing this rejection at around 140.60 and have just been shorting it and shorting it. So you can do this 2 ways. You can take calls, you know, if we break at 140.60, if we do not, then go ahead and grab some puts, you know, trade the momentum it has and just go with the trend. Okay. Let's look at STMP. Would it be wise to trade something that gapped up? Stamps.com. Holy moly, wow, what happened here? Whew. Does anybody know? No. This is huge. This is a huge spike. You're up at least about $100. There's no way we're gonna continue any higher. And when we have these huge spikes, so where we're at 324, holy smokes, man. Yeah. Yeah, the only way you can trade this is by grabbing some puts, but even then, you know what, your IV is gonna be just way too high. And yes, gaps fill 80% of the time. This is a crazy spike. I'm surprised it wasn't halted. But yeah, this would be a nice bear trade, but always wait for these levels to break. So if you decide to grab some puts here, you can grab some here under 319.24. And then, you know, hoping we can go down to 260. That's a pretty good drop. But don't rely on us or on the price to be hitting this the support level. Let me draw this out. Don't rely on it. Just use your best judgment. And you know what? Let's chart this together. So we're all the way up there. Let's see, what's our next resistance here? 314.57. Oh, okay. Looks like we have a supply zone too. A lot of things going on. Crazy spike.
Hey, Angie, which stock is that?
STMP.
Okay.
Stamps.com.
Okay.
Yeah, so if we break, if we break under this level here, you can do 319.24, or if you want to be a little patient, you can wait for 315.90 and grab some puts here because we approached a supply zone, and the rule of thumb is that you trade it below or you trade it above. And being that it went up so high, chances are that it's going to just, you know, just free fall. And your next support level is at 291. Oh, 292. And then we have a little demand zone here between these levels here. And this is something that we covered in class, so it should be second nature to some of the members here. So you're in between here, so you can grab some puts here and ride this, you know, to your next support level at 292. Not saying that it's going to hit, okay? I'm not saying that. You might want to be on the 5 minute just to be on the safer side. just to see where we're going. But look, we already have a lot of selling pressure here, and people are already starting to show some selling interest. Oh, really? I don't know who that is, but that's interesting. That's crazy. That's a lot. Okay, so he was the fat finger. It wasn't a lot of people buying it. Okay. Yeah, that's a lot of money. That's insane. Yeah, the options are probably going to be really expensive. And look, your IV is already to the max. Your IV is probably going to be like at 200. So just be careful if you guys decide to go ahead and trade this, okay? Anyone else have any questions?
I see Krispy Kreme started options today.
Oh, did they?
D-Nut,
What's their ticker?
DNUT.
Donut. Oh yeah, they did. Yeah. Yeah, but you know what though? Whenever they start their options, the IV is gonna be really high. So what I like to do is I like to just wait a little bit and wait until the momentum kind of cools down so we don't get IV crush. And I'm sure the IV is probably like above 100 at least. That's a little high. But again, if you guys want to trade this, you guys can catch some calls above 1840.
Now I was just cracking up. I was like, options on donuts. I'm like, okay.
Me too. That sounds really good about now. Some donuts and coffee. Yeah, and look at all this choppiness. Look at all this choppiness. So something to, keep on your watch list. Once the momentum dies down a little bit, we can definitely, catch a good trade here. Okay, anyone else? Any other tickers? No? Okay. We'll wrap it up. And again, guys, thank you so much for participating in our class. And I'm sorry, in our workshop. You guys want...
Isn't Tim not able to do anything anymore? Like we're not able to action.
Okay, if you guys want more detail as to our trades or how we approach our trades and our strategies, you guys can take our course. Send us a DM if you're interested. Also, if you're not a member of our group, send us a DM and we'll give you a 2-week trial to check us out. Okay. Other than that, guys, have a good day. I hope you guys have a profitable day and don't get faked out. Don't get FOMO. All right. Follow your rules and stick to your plan. I'll see you guys in chat.
Thank you.
You're welcome.